Good morning, it's Harvey Jackson. A StatsCan report came out yesterday, and I think what it actually did, and I'm going to say what it did is made the market go down on canola pretty hard, and it's still, as I look at the charts here today, it's still going down. But I think rather than saying that it did anything to the market, it just confirmed that the crop is not small, and I think that's what spurred the market here. So you can see canola not far out of the estimates. It came in at 1994, so somewhere in the middle of the range, and yet it still spurred the market to trade uh, with lower sentiment. And it's hard to understand that the market needed the market that had to pull back, but with the lack of exports, with China being missing, uncertainty in the U.S. Renewable fuel program, we have lost the potential for a lot of our product going somewhere. This slide is just showing how the U.S. export demand isn't bad on the soybeans, and that said, they are at a pretty high pace above. You have to go back to 1819 to find this kind of a pace. So let's just have a quick look at some of the weather. I was talking to one of my friends over in the Ontario region, and now they're starting to get a little bit concerned on dryness on some of their corn soybeans over there. And yet the drought monitor is not quite showing it. Nothing like what's showing in Western Canada. But here's your global map, and then here we are looking at our map of Western Canada, and you can see where the problems lie. I'm going to say the Interlake, still some north eastern Saskatchewan, the Battlefords north of Edmonton. So this whole northern area actually has a lot more problems than normal, but just-in-time rains make a big difference. Here's some temperatures. We're still in the next 0 to 5 days. You're seeing some hot temperatures in the prairies and cooling in the corn soybean growing area, and that starts to push back into some of the southern regions in Saskatchewan and Manitoba. And then we get back to the 10 to 15, and it goes back to normal with this cooling conditions in the U.S. still, and that could be concerning. This big crop that the USDA had said that we have is likely getting smaller. Ours is getting closer and closer to harvest, and if anything, it's probably just bringing on harvest a little bit quicker. Quick look at the market here. We've got canola down almost $7. European rapeseed only down $1. Soybean oil down another 0.42 of a penny. Crude oil is down a little wee bit, and a lot of the wheats are just kind of just hanging out there on the unchanged. Canadian dollar is just slightly down as well, while the feeder cattle are taking a breather from its big rise up here. So if we just have a quick look at the canola, we're making new lows. Like we had that low that got made. The announcement of the seed is going to fall under 100% or 75.8% tariff with China, and now we've made newer lows. We're sitting at 629 when I took that screenshot. European rapeseed down just $1, but we had that down day to follow us yesterday. But this keeping up of pace is actually $116 differential, European rapeseed to Canadian canola. I put in a trend line, and again, anybody can put in a trend line, and it's not a big deal, right? Everybody's going to draw it in a slightly different spot, but here the soybean oil is basically running on this longer term trend line that got started basically in March. So if it breaks through there, we've got some more downside, and it could almost make it down to this 200-day moving average, and that wouldn't be good for canola. Here I just did something similar with the soybean seed as well, and it's kind of looking like it might actually fall apart here a little bit as well, even though the exports are pretty strong. Crude palm oil, little ways from getting to that trend line. Here, your crude oil is still chugging along right at these moving averages, really, up and down, but not a whole lot of trade, just basically going sideways. Looks like this Canadian dollar wants to get moving towards this moving average here as well. So it basically has to get around above the 73.76 And as soon as we get into this range up here, I think we should be, clearing up some of our U.S. dollar deficits on our brokerage accounts. This is the look on the wheat, and it's not a good look. When we look at Kansas, we made a low yesterday. We traded a wide range yesterday, but actually closed off positive. Right now, it still looks like this short-term moving average is just is trading above this market on the way down. It just keeps on staying there. Chicago, we're currently trading at a couple of those moving averages because we've had a little bit more time of trading sideways here. I'd like to see it get above, the 535 area, and it would actually have some momentum to go up. Corn looks like it still wants to continue to go up here as well. It has to get above its high that it made here just a few days ago at I'm going to call it the 415 area. That's all I have for you today.